think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. And today we're back with expert trader Chris Vermeulen of the Technical Traders. How you doing today?
I'm good, Daryl. Thanks for having me. Always a pleasure to be back on the show.
Yes. So markets have been rallying. I wasn't positioned. I didn't. I had kind of exited my trades, and I had my long-term holds, and I was just like, hey, I'm focused on some other things right now. And then usually I pay attention to key events, and I knew the election was a key event, especially if it was a Trump win. And some of my audience knows that I invest in crypto and Bitcoin, so I did benefit on that side and with some of the other stocks I hold, but I didn't get positioned with any trade options or anything like that. And we saw the S&P just rise significantly after the election results, and the Dow and all of that. And so, what was going through your mind during that time, and how were you positioned? Prosper. And today we're back with expert trader Chris Vermeulen of the Technical Traders. How you doing today?
Yeah, well, I think from the sounds of it, you played that really well from a risk perspective. Very similar to what we did. So long term, we're long the markets with positions in the indexes. Short term, leading up to the election, a lot of people did what you and I both, it seems like, have done the same thing. We trimmed back positions, reduced our exposure because we were coming up to a big event. The charts, the way I look at the charts and the money flows and what was happening was telling us to lighten our load, reduce equity exposure. So we were still long when the election went with a small portion of our portfolio because we were doing the same as you, just reducing our risk, knowing that there's going to be increased volatility. Overall, I mean, the markets have screamed higher. Trump has got a bullish bias, or investors see it as a bullish thing for stocks. We saw, obviously, the small caps rocket higher. Like the Russell 2000 was up like 6% on that news, which is huge. And it's funny because the NASDAQ, which has been leading the way from the big techs, was the worst performing index on the day that Trump won. It was all the small caps, all the aggressive stocks. We saw the ARK ETFs skyrocket, blockchain, Bitcoin, all uranium stocks, lithium stocks, the really aggressive stocks is where the money went. And that's telling us that people are like rejuvenated. This new election has created there's clarity now, and people are moving into this market. So, I mean, we're long the market, expecting it to still go higher. I think there's potential for the SP 500 to rally another 8% or so. The NASDAQ might actually has potential to rally about 13% from where it is right now. So there's some pretty good potential going into the end of the year. Seasonality wise, this is a very strong time for stocks. And the election cycle is now in play. Usually the first year of elections can be a strong year. I'm not sure if the whole year will be, but I think going into the end of the year, the stock market should do all right. I do believe the big picture, though, if you eliminate the election, the stock market is on borrowed time. Everything behind the scenes is actually breaking down. And this is really an event-driven move up in stocks. And what goes straight up usually comes straight back down when it's based around news. Trend right now, that's for sure.
Yeah, for sure. You fight the trend, you lose your shirt and everything, and so that's very, very important. So I took the liberty. I mean, after we had talked before, we got on the show and we talked about Trump's tax cuts and thinking about just like, okay, doing a root cause analysis. Why is the market rallying? So we're getting to the why, and I know that cheaper taxes, lower taxes for companies and individuals gives them more money, more breathing room to be able to do more things and engage in markets and be more risky. I mean, ultimately. And so ChatGPT says that in 2017, Trump signed the Tax Cuts and Jobs Act, which was on December 22nd, 2017. And then the provisions took effect on January 1st, 2018. It says, following the enactment of the TCJA, The S&P rose approximately 19% in 2017, and which is kind of interesting. I mean, because it rose leading up to the passing of that law, and then it also continued its upward trend, reaching record highs in September of 2018. And so it ended the year in a slight decline due to market volatility in the fourth quarter. And so it seems that the markets like tax cuts. And so what do you think tax cuts are going to do for the markets this time? Hey everyone, this video is sponsored by Power Metal Resources. Be sure to click the link in the description below so that you can find out more about their company and you can benefit from the commodities bull run with the variety of commodities that they focus on, such as uranium, gold, silver, and many others. So be sure to click the link in the description below. They are on the OTC as well as the London Stock Exchange, and I think you should check them out. So be sure to click the link in the description below to check out their company and what they have to offer. Thank you all, and back to the interview.
Tax cuts, it's bullish for the economy, more or less, for individuals. As you said, it's going to give people more money in their wallet to spend. It's going to help businesses have more profits, all of that stuff. People will spend more. It's more beneficial tax-wise for businesses. So it should be bullish. That being said, when you look at the charts, actually, if I just share my screen here, let me just show what you were talking about. If we look back where the tax was taking effect. So here's a line. This is where the tax. So as you said, market rallied in 2017, leading up to potentially Trump getting in and tax cuts. And once it happened, the charts are actually not the greatest. This is a broadening formation. This is increased volatility. The market was all over the place, and we have the COVID crash. So just based on this, I'm expecting we're going to see more volatility in this market. Now I think a lot of people, we're seeing the same type of thing. We've had a run up right now into now Trump getting in, just like we saw in 2017. Maybe money's been expecting this and it's already been flowing in and most of the money is in. And I believe this pop in the markets right now, because it's so news heavy. It's such a big event. Anybody who has missed this rally, who hasn't been long for the last few weeks, few months, last couple of years, they're all missing out. And this is a big enough event that is going to create that FOMO where people who aren't involved are going to be like, all right, I just have to get in. I'm missing out on all this. Everybody's making money but me. And I believe this news is going to pull that money into the markets. And I think it's going to create a major market top. And I think we're going to have a ton of volatility in 2025. I think it's going to be a crazy year for all asset classes, equities, precious metals, real estate. Businesses in general are going to struggle. I think we're going to go into a very volatile stage. I think it's going to be more so to the downside. But we're seeing something similar to what happened last time Trump got in, which is a big rally towards it. And then after that, it's chaos. And I think the markets were going to go a whole lot lower. And this was a topping phase until COVID hit, and then helicopter money and stimulus just muscled the markets higher and completely buck the trend and force things up. So I do think there's a little bit of upside left. I think it's going to suck in people who aren't in yet, and then the market's going to top and we're going to go into volatility just like we saw last time. Usually it's buy the rumor, sell the news, and that's what happened. Everybody bought into it, and I think that's happening again. I think people were anticipating something happening, and now it's going to happen. And so usually it's sell that news, right?
Mm-hmm. Yeah. So obviously we have the tax cuts on the table. There is a lot of talk in the cryptocurrency community. I mean, Trump was at the Bitcoin conference this year. He spoke about United States having a Bitcoin reserve, and so Bitcoin rallied to all-time highs on this news of Trump winning, and then also with the Senate and the House, and the talks of firing Gary Gensler and such. And so What do you think is that could look like for crypto? I mean, if because this kind of changes the landscape in in how things have normally been operating, because now you have pretty much support of the government, and many pro crypto senators and representatives had got elected because I think they put was it 200 million or something behind campaigns that were pro crypto, and so this is
Yeah,
kind
yeah.
of interesting too.
Yeah, so let's take a look at it. So crypto is actually a really interesting space. So I bought crypto about 10 years ago. I've never bought any more. I've never been, it's not my core focus. It's really volatile. Um, and so I'm not a huge crypto fan whatsoever. My focus is on focusing on equities and bonds and currencies, which I guess you could say crypto is a currency, but I'm talking like other currencies, not crypto space. Um, but for the first time, I'm actually very excited about Bitcoin. So this is the monthly chart. And what I really like about this chart is from a technical trader standpoint, there's a whole bunch of different chart patterns here that you can draw or you can pull from. And one of them is we have this bull flag pattern. A bull flag pattern is a very strong chart pattern. It's a halfway move. So this is the first run up. This is a pause. And whatever this run up in value is the same run up that should happen for the second half of the move. So this is known as a bullish chart pattern. Also, you could argue this is a cup and handle pattern, which is one of the strongest chart patterns. You can take the depth of that cup and stack it on top, sometimes 2 or 3 times to give you a crazy, ludicrous Bitcoin value, which I'm not going to do. But let's go with the most conservative play. And the reason I bring this up is because I actually bought Bitcoin this week for the first time in like a decade because I like this chart pattern. Has nothing to do with Trump getting in. It has everything to do with the chart and the money flow going into Bitcoin is telling us we should see higher pricing. And so using my favorite tool, which is called Fibonacci extension, we can take the low of where the last major rally started. We take the high of where it put in a top and we come back down to these lows. Generally, if there's a long wick candle, I usually try and find a more conservative play. I use 2 candles. And if I just carry this forward, it's going to draw on the chart where Bitcoin should go. And so it is telling us that we should see Bitcoin rally up to about 89,000 or 90,000. And if it pauses or pulls back for, say, a month or so there, or has a hiccup, then we should go up to about 112,000 per Bitcoin. And so there's some pretty good upside. We're looking at like 17 to like 47, 48% upside potential in Bitcoin over the next, 4 to 6 months. So there's some really good potential here. And that's why I like this. And this is whole part of my strategy, which is find an asset that is starting a new major uptrend and invest in it. And I like these big monthly charts because these trends last many months. And it's not like it's a quick little trade you get in and it's over in a couple of weeks or something. This is like you get in on the train and it's leaving the station and it's a long journey and there's a lot of potential. So I like Bitcoin. This is the first time I've liked it in a very long time. I have no problems buying it at all-time highs when it has a chart pattern like this. Generally, when it's at all-time highs and it has a pattern like this, it's imminent the return on investment, meaning it should just keep going higher and higher versus trying to pick a bottom and waiting years for sometimes debase like the precious metals or miners space. They can be dormant for a very long time. And so I'd much rather wait for a trend to confirm like this and have a really strong pattern and hop on, catch that move, and then move out, lock in the gains, and wait for a new setup. So everything you mentioned, like I'm not big into politics or news, so it's really interesting to hear all the pros I think about Bitcoin in the United States, and it makes sense. This is starting to move up, and I think people are moving into Bitcoin.
Yeah, yeah, for sure, for sure. Yeah, I try to mix a little bit of the macro and what's happening there, and then now I'm getting more into the charts, and so to see what the charts are saying, and I mean the charts are pretty much confirming, the okay, we have a breakout and we're at all time high, and the Fibonacci is saying that it's going to go on to about 111 or 111,000, 112,000.
Yep.
It could have probably overshoot that or undershoot it a little bit, so give or take, but I think
Yeah,
that
it's a zone. It's an area to like, look for to pull profits off. Like if when it hits 90,000, it's a spot you'd pull a little bit off the table, move your stop up, and then, it could blast past the 100% measured move, but those are levels you want to slowly trim positions or move your stops up. But I mean, long-term investing, long-term success as an active trader or a passive investor is all about managing risk. And people will just hold stuff and go through the roller coaster ride. And a lot of people did do this with Bitcoin and the stock market. I mean, a lot of people suffered this recent almost 80% loss in value on a trade, and just
Mhm.
because they don't know how to identify trend reversals, they don't understand risk management, or they just want to like look long term. I don't believe in losing this much, because in order to make this recovery back, you've got to make like almost 370% return just to get back to break even. And that is, I mean, Bitcoin can do it. It's pretty volatile, but it is a heck of a ride. And you're really betting on a 400% rally to break even. So this is where a whole strategy comes in, where you don't just buy blindly and ride out stuff. It's like identify these breakouts, play the move. When it hits targets, trim off, and then go look at another asset that's doing this again. It's something fresh, and keep moving your money, rotating it, reinvesting it into the index or bonds or a current, like the US dollar index or whatever it is. So you're constantly playing this type of chart play out. You're some new run moving higher, and that's what all of us traders try to do. Is like, how do we always own stuff going up? But most people get caught in emotions. They get caught in news and all the BS that sparks your emotions in the news, and people just kind of hold positions. They don't want to get out of winners, and they put on trades because of fear or greed, and those are generally done at the wrong time.
Hmm. Yeah, there's been this is Bitcoin has always been seen as like a risk on trade, and I'm wondering if that's still kind of the same sentiment, because we saw the dollar, or well, if we could look at the dollar, that'd be great. But we
Yeah.
saw gold sell off as soon as the election results were announced, and that's usually I mean, gold is the safe haven asset. And
Yeah.
so, what happened with the dollar in recent time?
Yeah, so we have seen a giant pop in the dollar. I'm not 100% sure why. It could be for a couple different reasons. Well, as you just mentioned, we have seen the dollar rally very strong over the last couple of months. If we look at gold in this exact same time frame, it has also moved up and rallied. Not too often we see both of them have big gains at the same time, and so this to me is a big red flag. Generally, the dollar moves up when there's chaos in the market, when there's a big market correction, a bear market. In 2022 for stocks was a bear market, and the US dollar posted like a 17% gain. And I do believe that in due time, I think we're going to see the US dollar skyrocket back up to 115, 116, potentially up to about 120, 124. So huge move in the dollar. But this pop, as you just mentioned, Daryl, I don't know if it's a pop because people are scared out of their minds, and the dollar's kind of foreshadowing that there's chaos coming in the markets, and the dollar is going to rally as a safe haven reserve currency still, which tends to be what happens. Or did the dollar rally because Trump and Elon are going to get in there and try and cut costs and spending and actually run the government like a business instead of just like a fundraiser and blowing money, spending money everywhere, like, and everybody, gets no real benefit out of it. And maybe if they're going to make, supposedly America great, and doing all this stuff, maybe the dollar is seen as a better currency, and that's why it went up. So I'm not sure. Nobody really ever knows why an asset does what it does, which is why I don't follow the news and in politics and all that stuff. I just follow price. It's just like my neighbor used to always say, is like, if you want to know what the weather is, go outside. If you want to know what, the price of something and which way it's going, go look at the price. Don't look at the news. Don't read people's opinions. Just look at the short-term trend, the long-term trends, and where the money is flowing, right? So that's how I see it. And I believe the dollar, when we look at it on the monthly chart, you'll see it from going way back in time here. I believe we're going to see the dollar eventually have a huge run up back up to the 120, potentially even higher. It is channeling to the upside. We have a series of higher lows and higher highs. That's the definition of an uptrend. It's had a beautiful pause here. And if chaos hits, just like in 2000 tech bubble, we saw the dollar have a huge rally. 2008 financial crisis, the dollar had a huge percentage rally. 2022, it had a big. Every time there's uncertainty in weak economic times, we see the dollar rally. And I believe we're going into one of those. That is going to put pressure on metals for sure. And it might put pressure on crypto. I don't follow crypto enough to a lot of people are like, oh, Bitcoin's tied in with the NASDAQ, it moves one for one. I still believe crypto is its own thing. It can decouple at any time. I don't believe you. I believe you just trade, Bitcoin for what it is. Don't tie it into what other assets are really doing. But I'm bullish on the dollar. I think we're going to go into difficult times, and the dollar is going to pop and become a very good investment to hold U.S. dollars.
Yeah, yeah, for sure. And so, could you go over to gold? So, obviously, the dollar has its role, especially when there's chaos. People sell assets, they liquidate, and they go into dollars, and they sit. Um, so for gold, I mean, gold obviously has had a big rally, and gold has had many tailwinds, such as the deficit spending,
Mhm.
the national debt, geopolitics, and turmoil going on in other nations and such, and even central banks buying the gold. And so it seems it's kind of interesting just seeing like both of them rally together. I mean, obviously, not everyone who um, everyone who lives at least in the United States most likely transacts in dollars. Like not everyone buys gold.
Yeah.
But it just thinking about it, it's interesting seeing them both rally. But overall, like even under the Trump administration, deficits are still going to go higher. Like, I don't think that we're going to turn this train around, or that Elon. I mean,
No,
I would be
I don't
surprised.
know if it can be turned around or stopped.
you know and so that's kind of just my mentality in terms of when I'm buying gold. I mean,
Yeah.
I mostly buy physical, and I just hold on to it. But I mean, I can see the reason for the pullback. People wanted to take some profits and gain some more profits in some other sectors.
Yeah. Yeah, well, gold's hit a pretty major level. Using Fibonacci extension, we can look at the low from before the last super cycle started, in the 2011 high and the 2015 low. We can carry that forward to where it is, and this 2750 mark is a level I've talked about for years. I talked about it once we broke out over here, when gold broke into a new super cycle. I wrote an article and I said, hey, the next upside target is the 618, which is about the 2100 level. If it pauses there, then we're probably going to go up to the 100% level. And that's where we are. And so I've been talking with subscribers for a long time saying, once we hit 2750 in gold, expect something to change, and expect most of like the upside for gold most likely right now, I think, is gone. I think right now we're getting into volatility. We've just had an event. It might push a little bit higher, but this easy money kind of run higher is done. I think buying up here now, you're buying at kind of maximum kind of risk. I believe we're going to see some type of pullback and correction in gold with the economy, just because when selling hits, fear hits, people sell everything. And sometimes they're even forced to sell gold, even if they don't want to, because people are always over margined and over leveraged, and things get sold. And this scenario with this multi-year pause and the rally and the new all-time high level hit is very similar to what we saw back over here. We had the super cycle start, we had a multi-year pause, and then we had a rally up. And then we went into the financial correction, and we saw gold and silver have a big pullback. It will be an ultimate opportunity, just like back in 2009. Once gold puts in this low, then we're going like 3,500, 5,000. I don't know what we're going to in gold. It'll rocket higher. Silver will probably go to like 80 or 120 an ounce. There's going to be amazing opportunity, but I believe we need to suffer some pain, if in metals, meaning they need to pull back. And Daryl, the way I like to look at gold, I'm part of this sci-fi adventure movie with kids, and so I'm in this space realm. And so look at, like, if you zoom out on Earth, right, and it's just floating in space. Planet Earth is like the hive mentality. Gold is like the mentality of investors around the world. And so when we see gold start to rocket higher out of nowhere and outperform everything else we saw in 2007, we're seeing it now. This is telling us the whole world is nervous. They're nervous about fiat currencies. They're nervous about real estate bubbles. Equities are overvalued and ready to correct. all the stuff you said before that's unfolding with debt and printing, all of this stuff, people are getting nervous and they want to get out of that financial system that's all tied into banks, and they want to go to physical gold. And that's why we're seeing this move up. And so when the whole world is nervous, gold does this, and it is a huge red flag that we're about to have some type of financial reset. And to me, gold is the ultimate barometer of what's going on. It doesn't mean it's going to happen like right now. It means it's coming. Everything is unfolding as planned. In terms of what sectors are coming to life. We're seeing energy stocks trading near all-time highs, gold's at all-time highs, industrial stocks. We just had a big boom in businesses, and everybody's been piling in, upgrading their facilities and factories and stuff. And typically that happens right at the end of a growth cycle. So there's a whole bunch of stuff. Unemployment's slowly inching up. Deficit or defaults on credit cards is skyrocketing. Defaults on commercial real estate is already on fire and taking off. And now residential, there all kinds of stuff is coming. So this is a huge tsunami of weakness and signs of weakness to come. And it's just a matter of letting this kind of fizzle out. And once the music stops, it's going to get pretty ugly, which is not bad for somebody who sees it coming and understands it's part of the process. It's actually an opportunity both on the way down and an opportunity to reinvest even into better stuff, new things once a cycle happens. So I love gold because it's a really good feel of what the whole planet is doing and how fearful they are.
Mm-hmm. Yeah. Thanks for sharing that. So the Fed recently cut interest rates another 25 basis points, and for me, like I'm getting ready to sell my house and everything, and I'm just like, okay, what's interest rates doing? And so what is the real estate looking like right now? I know without the Harris victory, I know Harris was planning to give like a credit for first time home buyers, which I think that would have drove the price of housing up. But so now we have a Trump victory. Fed's still cutting rates, and so I'm wondering what real estate could look like.
Yeah, real estate is it looks pretty bleak to me. I was just trying to see if I could find some of these charts that I have on it, because it is there's some really interesting. So if we take a look at a couple quick things when it comes to the economic side of things. So we've got unemployment or job cuts picking up in manufacturing, which is a very big leading indicator. This is like 3 to 6 months ahead of the economy. I used to run an importing business. I used to be overseas in China doing products. And if manufacturing is cutting employment, that means they're not getting the orders, and there's a huge their leading indicator, which isn't good. We're seeing another thing in leisure, hospitality. So job cuts are coming there. People aren't opening their wallets and spending and traveling as much. Inflation is creeping in. And then professional services. I was just in Las Vegas with 36 highly successful companies and their founders, and they're all saying the same thing. Business has like come to a grinding halt. Wallets have closed, and all these businesses, professional services, are not being used. Every business is cutting all of these services. And so we're starting to see a lot of layoffs in the business space from there. And so that's kind of leading into this unemployment starting to rise. Every time we have unemployment cross one of these red lines, which is the 2-year moving average, we go into some type of financial crisis. And right now we're seeing people have burnt through their excess savings in the United States. So pre-COVID to where they are now. So that is now leading to credit card debt racking up. A lot of credit cards now are maxed out and then they're delinquent. And that is not a good sign, because when credit cards are the first one people just default on. And then once they're totally strapped, then they have to default on their mortgages. And that's what we're seeing now, is now mortgages are starting to default, which is not good. And banks are going to get stuck holding the basket of credit card and mortgages. And if we take a look at the cost to buy a house right now, we are in this like nosebleed territory in the markets where it's just ridiculously overpriced to own a house, and something is going to have to break here. We need to have a reversion to the mean here. And what's interesting is if we take a look at what happened back in 2007, we start to see housing starts stall out and roll over. This happens before the housing crisis starts. And we're starting to see the same thing now. And to take things another notch further, during COVID, when the world locked down, there was a drop in the amount of existing home sales taking place. This was a record low, based on what was going on, and so people couldn't really close on homes. And here we are now, a few years later, we're making new lows. The amount of homes being sold has come to a grinding halt. And when we take a look at what's going on with the inventory of houses, we see home prices are holding tight. They're not dropping very much. They're just holding tight, but they're not selling. My town, I think I talked about this with you last time I was on, had about 60 to 80 homes for sale in my town during the boom a couple of years ago. You couldn't get a house. It was like a bidding war. Now there's over 600 homes in the town for sale. Nothing is selling. I was talking to a real estate agent 2 days ago. He's like, this is a terrible year. He's like, barely got any sales. Nothing is selling, tons listed, but nobody wants to lower their price. And eventually people are going to have to sell. Eventually they're going to give in. And the price of homes, this is just like charting a stock market. When it breaks out, you have a huge run. Eventually you put it at top. Once support breaks, you're going to have a big collapse in price. So home prices are about to break down and start falling very quickly. And so I think, getting out of your house now is not a bad time, because I think you'll be able to have a pick of your litter, a year or two or three from now, saying, oh, now I can get one with an extra bedroom and a garage attached and whatever else you want, whatever your perfect scenario is, at a later time. The key is obviously get out before things drop, and just realize like nothing is selling right now unless what you think you're giving away cheap is actually the market value. Like I was at this conference and this person bought a 100 unit multifamily building, and they were like, hey, we got a killer deal. We got it for like 20% under market value. He's like 15 to 20% under market value. And I follow the real estate space pretty big. My dad was huge into it. So I grew up. He had about 1,600 doors at one point. And, this person who's bullish and thinking real estate is going to double again in 5 years, which to me is pretty crazy. He thinks they got a killer deal. And in my head, I'm like, actually, you're 20% below the current value. That actually, I believe, is the market value. And everything's going to drop to that really quick. And then we're actually going to see it actually collapse even more. So my thing for people trying to sell a house right now is like, what you think you're giving it away, at a lower price is like probably actually market value. And it's only going to go lower. That's my belief going forward. So this is definitely the time to unload before the breakdown, I think, in home pricing. So that's my take. I think mortgage rates will probably come down. Homes will start to sell. There'll start to be a lot more sales of homes once the price starts to break down, but it doesn't mean home prices are going to go up. This is what we saw in 2008. We saw home sales start to pick up and skyrocket, but there's only more home sales because prices kept going down and people were buying as they fell. But the home prices were still falling as well. So the housing market is very interesting. It's a huge, most of us have one as one of our biggest investments. So it's important to know mentally, if you're not selling your house, that just know that your current value you live in, it will go down. But if you're not planning on selling, it doesn't matter. But if you do have properties and you're over leveraged, or you want to step aside, this is probably a pretty opportune time. I think it's the last little window before things kind of collapse.
Yeah, definitely. And some of this also depends on the area you're in and stuff. But for me, I'm in an interesting area where there has been more homes for sale. It definitely doesn't look like during the pandemic, but looking at so I live in a more secluded area that's close to Seattle, but and so many times, what we saw in during the pandemic, many people from Seattle were moving over to my area because they could sell their home for significant value over there, and then they could come buy up the homes cheaper in my community, and then their dollars, they would have a lot of money left over, and their dollars went a lot further. And so it's kind of been interesting. I think we had about two homes go up in my neighborhood recently, and they sold within 30 days. Yeah. But I'm trying to get out and just be more nimble and ready to go when another opportunity comes.
Yeah,
for
for
sure.
sure.
Just like any investment, there's pockets, right? In real estate, there's towns in certain areas that hold value or are still strong. It's everything is unique, but I'm just talking the general
Yeah,
tide
macro.
of real estate, is kind of it's in a transitional phase from being up to like on the verge of the tide slowly going down. And
Hmm.
over time, it'll pull on most properties.
Yeah, but I mean, I do think it's important to have that outlook because you do get, sometimes the real estate agents, they just think that the market's going to go up. Like, oh yeah,
Oh, I know.
it's
It's
going to go up.
yeah, I know.
So yeah, thanks for coming on, Chris. Where can people find more about the work you're doing, and how can they connect with you?
Sure, yeah. They can follow me and watch some of my video analysis on YouTube at The Technical Traders. You can also go to my website, thetechnicaltraders.com, and you can join my free newsletter. I keep you up to date with videos and interviews that I do, keep you updated on the markets, and share some of my trade ideas and positions. So yeah, that's how you can follow me.
All right, I'll be sure to link to that in the description below. You all be sure to go check that out. And thanks for coming on, Chris.
Thanks, Earl. Always a pleasure. Take care.